Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock with good economic news that just keeps coming, even as fears don't abate. But first, for those of you returning to work, welcome back. For those of you still on holiday, lucky you. Over the weekend, data from China showed investors are still withdrawing funds from the country on a net basis. Foreign direct investment into the Middle Kingdom fell by 8% in 2023. But although the transparency on this data is limited, there was a suggestion that there was a small improvement in the month of December from a year ago. But that may just be a mirage. Bloomberg is reporting that things are getting grimmer in Chinese equity markets. Tokyo has overtaken Shanghai as Asia's biggest equity market, while India's valuation premium over China has hit a record. The meltdown in Chinese share values is wreaking havoc on the nation's asset management industry, pushing mutual fund closures to a 5-year high. In Japan's December CPI inflation came in at 2.6%, down from 2.8% in November, and their core rate was 2.3%, down from 2.5% in November. That is the 21st consecutive month it has been above Bank of Japan's 2% target. In the US, consumer sentiment, as measured by the widely watched University of Michigan survey, surged in January and inflationary expectations retreated. This was a combo that was not expected, or at least not as decisively. Sentiment is now suddenly at its highest in 2.5 years there. And north of the border, Canadian retail sales jumped in December. That was after a drop in November. But the December increase was the sharpest in 11 months. Closer to home, in Australia, the IMF released the results of its annual staff review. The IMF wants to see meaningful tax reform there and doesn't like that markets price interest rate cuts in 2024. They rightly point out that inflation and inflation expectations are still far too high there. The IMF's call for tax reform in Australia is a long-standing position, but one that Canberra ignores. The US Treasury 10-year yield starts today at 4.13% and down 3 basis points from this time Saturday. And the price of gold will start today up $4, just on $2,029 an ounce. And oil prices a little change from Saturday at just on $73.50 a barrel in the US, while the international Brent price is still at $78.50 a barrel. And the Kiwi dollar starts today at 61.1 US cents, a little change from this time Saturday. Against the Aussie, we're holding at 92.8 Australian cents. Against the euro, we're also holding at 56.1 euro cents. That all means our trade-weighted index starts today at just under 70. You get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.